Well, hi there folks, it's Matt Hayson here reporting on our property market as Sydney goes deeper into lockdown. But let's look at the property news for the week where NAB caused a bit of a stir, raising eyebrows as they raised their property price forecast for Sydney. NAB are now suggesting that property values in Sydney will increase 21.6% this year. That's more than 7% higher than their previous forecast, citing that there's been higher than anticipated property price growth. Now, it was revealed during the week that property values in Sydney had already increased 16%. So it turns our attention to how futile this property price forecasting seems to be. Let's look at the track record of NAB. When I go back to the 8th of May 2020, NAB were forecasting that property values in Sydney would decline by 10% through the course of 2020, with further declines expected in the early part of 2021. Of course, that turned out to be so inaccurate. Then on the 20th of November 2020, NAB were forecasting and had changed their view that property values would increase 5% in 2021, followed by 6% in 2022. Well, of course, 2021, that's been thrown out of the window and again, highly inaccurate. Then I fast forward to the earlier part of this month in 2021, where NAB was still forecasting property price growth in Sydney of 14%, as you can see here on their hedonic chart, and 6% in 2022. Well, of course, what we know now is it's come out that property values have already increased 16% so far this year. So the Brains Trust back at NAB went back to the drawing board and have revised up their forecast to 21.6%. So, if it was me, I would not be banking my property decisions on the forecasting of National Australia Bank. Now, as I mentioned, we are going deeper into lockdown, so August is a complete write-off. We are going to be selling under the restrictions that are in place. As you can see, the auction clearance rate last Saturday was sitting at 53.3%. Now, it seems to be nestling in at around that clearance rate during the lockdown period. Now, as a result of the lockdown, the nation's biggest lender, CBA, has revised their prediction when interest rates would increase. Just a month ago, CBA were warning borrowers that interest rates were likely to increase next year. This is despite the strong narrative and rhetoric from the RBA suggesting they weren't looking to lift interest rates until 2024. But CBA are now predicting that interest rates, they've pushed this out to May 2023. Now, looking at buyer behaviour, it remains stubbornly aggressive to pursue properties. We're continuing to see a very high level of online demand, and that's translating into huge volumes of private appointments. It's not uncommon for now our sales agents to be at a property for 3 or 4 hour time slots just to accommodate the volume of inspections. Now, we're also seeing less property coming onto the market. We all know that and the reasons why, but those fearless sellers that are bringing their home onto the market are actually having a very good selling experience and engaging a high level of buyer activity. So now we'll need to be monitoring how much property comes onto the market during August. Are people going to bring their home onto the market during lockdown, or will they wait till we turn a corner and for the spring market to kick into gear out of lockdown and bring their home onto the market? It's going to be interesting, that's for sure. One thing I can say though, don't base your property decisions on the forecasting of NAB. If you'd like to see a property, make sure you reach out to us. We're more than happy to accommodate a private appointment for you. Thanks for watching, and I'll catch you all next week.